what I've been working with Eric on, and this is something that I feel as if I'll always be doing this. So, it's just one huge document that I continuously have been trying to update. And this is something, like sort of personal. Yeah, I mean, I'm willing to share it, so it's not that personal. But with this, like, it's like little things like why am I doing this? Maybe like something just kind of keep me on track here. But it goes further into the management aspect of it. I have a bit, if it's hard to read, I'm sorry, I can try to clean it up a bit, but it does get kind of glitchy here and there. So if it does, just shoot it in chat that it's a little tough. But this, it's a whole financial management section, like short-term goals, near-term, long-term, things like that. And then I know on mine, this is something that I've been working on, but it is my TA toolkit. So all the technical analysis tools that I'm going over and I'm planning on using right now and then stuff in the future, things that I want to implement. So I have pretty easy things, simple moving averages, and then my exponential moving averages. And then RSI is something that I've been working with a lot recently, but that is something that I'm looking at wanting to change and possibly move over to like the money flow index. Things that I've seen on that, it looks like it might be a little bit more beneficial than just using the RSI. So it's something that I'm looking into to possibly getting switched over, and it'll be something that I need to update. And then moving down, right underneath that, I'd have my fundamental analysis. And completely transparent with you guys, I suck at the fundamental analysis. So it is pretty difficult for me. I don't know how it is for you, but it is pretty difficult for me to just go and understand the concepts. Oh, hey, straight. It shows that you're talking. And I don't know. Once again, it really might be me because seems like you guys can hear each other. Let me try something. One sec, guys. See if we can get audio. No, that's not it. Interesting. Interesting. Okay. Yeah, man. I truthfully, I'm at a loss trying to figure out how to fix this because it's like I said, it was working literally just fine for me yesterday. I was in Discord chatting. I did hear something. I don't know what that was. Just keeping it going for now. Oh, hey, I heard Stray J jump in that time. Oh, yeah, I just heard him. Hey, no, try and say something. I just heard Stray J.
Can you hear me now?
Yeah, 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 yeah.
Awesome.
Cool. I have no idea what I just did.
It's been being weird for me for this whole weekend.
Oh, okay. Well, glad I'm not the only one then. So, okay. So now that we can at least hear each other, do you guys have any like questions or just thoughts or anything like that? Just going over this like so far?
Let's see. I was trying to fix my mic a little bit. I wasn't watching what you were presenting.
Well, if that's the case, I can definitely scroll back up and go over some of the other stuff.
No, that's good, man. So you were talking about FA. That's the last I heard about it.
Hmm.
Uh,
So like with the FA, I know it's sort of a weak point, at least right now for me. Just in my overall trading plan, just because it's still something that I'm not entirely familiar with. So there's a few things that I'm looking at trying to just grasp at the moment. And, I mean, those things, the EPS, the PEG ratio, and the quick ratio, just really breaking those down is what I'm trying to do. It's on the list of, just small goals and updates for the trading plan. So that's something that I've been working on. And I know generally my trading style doesn't really involve me holding trades for longer than, like 90 days, 60 days. It's not even longer than 60 days. So I tend to not care about the fundamentals as much, which could be a shortfall, in the future, just because if I decide to start holding longer term trades or if I implement a strategy that requires, just long term holding, then I'll be at a loss then if I don't study it now. So figure I might as well at least have a really good idea of what I'm doing now just to get myself further down the road and have that knowledge then. And then going down into the actual strategy itself, I'm pretty simple. I have a pretty small account, so I'm really concerned with capital growth. So one of those things that I'm doing, is just getting down the real simple long calls. And for me, like I have the strategy listed out on here. It's strategy number one, and then something that I found to be pretty helpful was going in and just immediately underneath the strategy is having these little short goals that I can continuously update, just to make that strategy, just a tiny bit better. You're just constantly tweaking it. So, like some of those things is the placing 30 trades with different variables that I've specified. So, in this case, I just got done, it's like 1 or 2 weeks ago, where I placed 30 trades. I used Thinkorswim on demand just to help out. But I went in and placed trades only looking at a zero point 0.4 delta and then 45 DTE. So, and I placed all the trades on the S&P ETFs. I can tell you it's mostly XLE, XLF, and the SPY. So I just went in and just placed 40. I found a trade 45 DTE and zero point 0.4 delta. So just placed it. Didn't, I mean, the price wasn't a real concern, anything like that. It was just those two things that I wanted to make sure were absolutely perfect as perfect can go for this. So did that, ran the results, found out that it was positively expected. So ended up putting that in there. So this is something that I actually need to go and update and possibly change out, the different delta or the DT, and the next one it's add the expectancy results. So it's just these little things that I can just go in, the next time that I'm looking at it, and I can say, oh yeah, like this is kind of where I'm at. This is what I need to do. And if I were to jump in and say, oh, I have 30 trades done, and I don't really feel like starting the next experiment quite yet, but I just want to make a quick update. I can come in here, I can see this and say, yeah, let me just make that a note. And I can say, like test results posted. So, so that way the next time that I hop on, it's just a little note that I'm leaving myself for the future. And it's, for me, I know that's been really helpful. And then breaking down into the actual strategy itself, I have, sorry that it's broken up like this. It's the way Pages does it. I need to fix that. But I have the explanation of the trade. And for this, it's really just in, like a paragraph, a few sentences, what the trade is, what the trade does, and how it works. And for me, it's it's pretty useful and just for understanding the trade without because one thing that I find like pretty common, at least with people that I've talked to about trading, is whenever you're learning a new strategy, it's really easy to understand the strategy in your head, but it's a lot harder to understand the strategy and actually explain it to someone else. Like, I don't know if that's something like you guys struggle with as well, or what, but I know for me it's really easy to understand how a strategy works inside my head, but it's a completely different thing to try to explain that strategy to somebody else after thinking you understand it. And then moving on from that, I have little things. These are just kind of side notes within the explanation. It's saying that it's a higher risk trade. So, I'm giving myself that heads up, beforehand. And, things like max profit, max loss. I'm just, once again, it's just like giving myself that heads up. And then,
I got a question.
yeah, dude.
So, can you scroll back up a little bit?
Yeah.
So when you're looking for long calls, you just like run a search looking for point 0.4 delta and 45 days to expiration.
Yeah, for that test, yeah.
So you really don't care about the underlying at all. You just really just whatever's. Why don't you like? I guess why don't you like define it more, like the search? It's because that seems like it would kick back a lot of random stuff.
Oh, like yeah, I think I know what you like, random stuff, like just random stocks or just underlyings that really don't matter. Is that what kind of what you're
Yeah, just because I mean, so I guess when you're looking at like point 0.4 delta, if you're not doing any fundamental analysis at all,
mm-hmm.
then you're going to get, hundreds of stocks. So I don't know how you would like, I guess, narrow your search so you're not necessarily like, I don't want to say gambling as much, but like, so you have better results long term.
Yeah, that's a good point. I can say for this test, and mostly for this long call strategy, I've been strictly using like XLE. So using the that S&P ETF, I've found that, one, to your point, it's less like gambling because it's not just a random single stock, and at least in this case, XLE has been doing pretty well. It's got good fundamentals just because of the energy sector has been doing really well. But with it being an ETF, for me at least, I feel more confident in placing those trades because it's a basket of those stocks and it's not just a single stock. So I can say that, and to your point, it's probably worth defining for me or for anybody that were to ever read this to say, you know, um, like having a note in there saying these fundamental analysis tools will help you um, get to a better underlying. In a short way to say that, but no, I think
I
that's
get what you're saying now. I thought you were talking about like you just run a screener with everything that's point 0.4 delta and 45 days to expiration, and then just sort through every single stock that pops up. But if you're doing it with like primarily
Yeah, that I mean, it would be a fun test to do, just to scan and just say like, oh, let me just grab like the first 10 that pop up and see how crazy that would be. Yeah, and I mean, that is a good point though. I mean, that's a good note to make, is to have some sort of it for this, some sort of fundamental analysis, or even just sort of screen if I were to deviate from trading ETFs to say, or keep myself within some parameters so I'm not just trading like random shit stocks that are just not going to do me any good whatsoever. So, no, that's a pretty good point. Going into like allocation, I know at least this. So, this trade itself, this strategy, it's really just a speculative strategy. And, I can narrow it down and I can work on it and work on it to the point where I know what the expectancy is. I know, like my probabilities of profit on these types of trades and everything like that. But still, it's just a directional play for me. And it's a higher risk type of play, no matter how I work it in my favor. So with that, I keep it in the speculation portfolio. And for my allocation, it's just 10 to 15% of my entire portfolio. So, my core strategies, that's going to take up, um, I think I have it 70 to 85%. And I do 85% just so I can have a little bit of cash, like moving down here. Actually, it's up here. Once I have my allocation, if I can grab it, um, oh, that's interesting. Maybe I don't have it on this version. But I have it allocated out to where this trade itself is only 10 to 15% of my entire speculation portfolio, or my entire portfolio. And then a really helpful note is the time frame. Defining the time frame for me is really important. Just so when I come onto this document and I'm looking at it, and I'm looking at the strategy, or if I handed this to somebody else and they were looking at this strategy, they could just see, like what a short term trade is for this strategy, or in my thoughts, what a short term trade is, and that's 1430 DTE. And then what a long term trade is, and 45 to 90 DTE. And I know for me, well, like trying to define these was pretty important, just because how I define these trades and how I narrow these down will affect my expectancy. It'll affect my profitability. And so, really thinking about these has been really important to just understand how this trade itself can be profitable. And, if I'm trying to do a short-term trade, what that'll look like versus what a long-term trade will look like. So that was still is pretty important thing for me to try to work out. And then profit and loss, I feel like it's most important, just with every trader, having a good profit and loss definition for any trade, I think is pretty important. And then, like for mine, these short term trades, just trying to get in, get out, 10 to 30%. Like 30% is really max profit on short term trades. And then 10%, it's, worst case scenario, hopefully. And going even further, I think a good note, at least for me, is profit taking whenever a trade moves in your favor early. Like, um, an example is, I think it was XLE this past week. I was in it, and this was all just paper trade accounts. I had a paper trade on, and the trade moved up 60%, I think it was 60% in 2 days. And I was kind of sitting there looking at it, thinking to myself, like, is it worth taking profits here? It's just this, it's up 60%. That was my profit target originally. So I'm sitting there thinking, well, yeah, I mean, I could take it and I would hit exactly where I wanted to be, and I don't have to wait any longer. But also, a part of me was on the opposite side saying, well, if it's up 60% now, why not just hold it and let it keep riding? I mean, you're already in the profit zone. Let's see how far it can go. Maybe you'll hit 70, 80% profit. And I think doing that, going into the next day, I looked at it and it had dropped back down to, I think it was 20, 30% profit. So I think for me, it's a pretty good, important note to add in on any type of trade. I mean, whether it's for a short term or a long term trade, to say if the trade moves this much in this amount of time, or if a trade moves up this much in a specified amount of time, a range, then go ahead and take profits. You'll be fine. It's not, you don't have to let it ride out. Or on the opposite side, to say place a stop loss, a trailing stop loss with your profit targets.
Did they go over with you guys in the teaching to trade segment? I think in episode 8, he said 30% max profit in 3 to 4 days, 50% in a week, or something like that.
Yeah, yeah, that's something that I've kept in the back of my mind. It hasn't been something that I've written out yet, but yeah,
Yeah.
that's what Eric's gone over. Yeah.
Yeah, I wrote that down somewhere. I'm trying to find it. It's supposed to be somewhere around here. That's good. So, Ty, did you put any stop losses? Do you put any stop losses on your paper trades, or do you manually manage them when it goes down to your last target?
Usually I manually do it for now. I for
Okay.
I still want to just be involved in that aspect, so I have the capability at least to go in and watch the trades, so that way I'm not letting a trade drop further than it should be without placing a stop loss.
Right. So you get like a notification on your phone to monitor the trade when it hits your target limit, and then go and manually manage them.
Yeah, yeah. Um, but I can say most of my trades though, especially for the strategy and the way I've worked out the expectancy, I'm willing to let myself run to the max loss. And well, that's dumb to say, not right to say. My max loss is 100% of the debit paid. So the way that I've worked this out on my expectancy is, if I don't cut the max loss any shorter than 100% of the debit paid, it still runs positive. And for me, I know that it works well just because when I'm going into these trades, I'm thinking right here. This is what I'm talking about. But whenever I'm placing these trades, I have to get into that mindset of, okay, I'm spending this amount of money on this trade. I need to be willing to lose it. And it's not to say that I'm placing these trades to lose the money, but I'm willing to part ways with the money if it were to come to that situation. And I can say, paper trade or real real money trading, it's pretty hard for me at least to watch that trade run to zero when I know that I can cut it short 30%, cut it short 50%, whatever the number may be. And at least for all of my paper trades, it has been a bit of a struggle, I guess you could say, to let it completely ride out to 100%. But I think it comes, or this is where it comes into my trading plan, to have this written out so that way I can read it and I can have the confidence in it. is saying that it's okay to have 100% of the debit paid as your max loss. And because, your expectancy is here, that it will be a positive result in the long term. I mean, that trade may not be a positive result, but the strategy itself is positively expected. So, you just got to have a little bit of faith in yourself and a little bit of confidence in your plan. And then, like, sizing for me, it's not very in depth since, like I said, it's still a pretty small account. So I usually just trade one lots on everything. So I don't really have any sizing rules. And I know that's a decently important factor in strategy is, when to size or scale into a trade, when to scale out of a trade, how much should you allocate to a trade, things like that. So for me right now, it's pretty straightforward. It's pretty basic. And then another good note that I think is having a setup, like how you're going to set up the trade, what things you're looking for, the tools that you'll have, like this is, just referencing the TA toolkit that I have. So you can just take a look at this, or you would read through this and say, oh, okay, well, I'm going to be using, these SMAs, these EMAs, or I'm going to be using Bollinger Bands. I'm going to be using the RSI or the Money Flow Index. And you're going to be looking for those things on your chart for this strategy. And you would move down and you would say, okay, these are the Greeks that I'm looking for. These are some other indicators that I'm looking for, like the volume. Because, I mean, if you're not looking at the volume, I did it the other day. It was, I think it's on the newest Teaching to Trade video, but I placed a paper trade on it was XLE, and it was a weekly, but it had no volume.
I think 7 June. That was funny, dude. I was laughing through the whole thing
Ah,
there.
man, and it's
When Eric was trying to tell you about this monster trade.
yeah, and I mean, it's funny because I mean, yeah, I should have looked honestly, and it fit my criteria, so I was like, oh, okay, yeah, that's fine, don't worry about it, and my mistake, but it's even funnier just because Eric, if he gets the chance, man, he will just lay into me, and it's absolutely hilarious. And I don't know what it is. I don't know how we started this, but it's just we're just going back and forth now. But yeah, no, it was pretty funny because I had no idea.
That was, yeah. I enjoyed that. And to add to that, Zach brought it up later in the session too. So like, hey, so going back to your message
Yeah.
earlier, this was
It's like, thanks, man. You made it worse all over again.
good times though. I enjoyed that.
Oh yeah. Well, hey, that's good to know. Yeah, so it's like having these little things listed out just because what, for me when I'm reading through this, I I have a lot of words. I mean, I do have numbers, but compared to some of these other guys, at least in my Teaching to Trade group, they have things listed out by numbers. I mean, it's more quantitative. So for me, it works really well just to skim through things and read things. So reading words helps, and that's why I have these guys listed out. So what I'm looking for is the volume, the implied volatility, the open interest, the delta, the theta, and those are what I've found to be so far the more important factors for this strategy. So these are primarily what I'm looking for every time I go to place this trade. And then, you know, moving down into setup, what you're looking for to enter this type of trade. You're looking for a low implied volatility. And then having the example, it's like, okay, well, if it's under 30%, that's relatively low for, most, if not all, underlyings. So, you have that number in mind. You're not out there looking for a trade and thinking, well, it's at 42%. implied volatility, is that low? I mean, it's relative to what? And for me, it takes out some of the questions. It leaves out the confusion, the ambiguity, and you can, for me, it just gives that little bit of confidence. I can fall back on it. Having the delta
Um,
listed. Yeah.
maybe you can add in something like implied volatility percentage there, so it gives you more context on where how far the stock has been, or how far the underlying has been throughout its entire cycle. So something I've been using as that go to. So implied volatility percentage really helps me get an idea of, especially in a long premium strategy like you're doing, right? So you don't want to pay too much upfront if the IV is high. You don't want to pay, from your pocket to kill all that IV later on. It might be difficult for you to capture all of that back.
Mm-hmm. Yeah, I mean, I think that's a really good note. Um, I know most of the time, whenever I'm placing trades, I know on the Thinkorswim app, it has it listed out.
Yeah, it shows up as correct. It shows as IV percentile, but it's actually IV rank.
Yeah.
But correct. But on the actual the main desktop application, it actually does show IV percentile on the banner on the charts. I know if you use that script, I think Eric had it out like a couple of years ago, maybe a year ago.
Mm-hmm.
I can share that with you here. Let's see.
Yeah, that would be dope. Um, yeah, and I mean, for this, it might be more beneficial to, you know, be precise about the implied volatility, just because I know you can pull up the implied volatility on just Thinkorswim in the options chain, and then you can pull up the IVP, the IV percentile, on the actual underlying itself. And at least for this strategy, the implied volatility is oh shit. The implied volatility is the IV percentile for the entire underlying. So it's not looking at the IV for the options chain because, to your point, yeah, I mean, um, it's not as accurate.
How do I share videos in this chat? Where is the chat for this?
Um.
Did you guys get that?
Oh yeah, there it is.
Okay.
Cool. Yeah, I will. I'll throw it in the queue or my other tab. Oh, that's not what I wanted. Cool. Um. So moving further down, we have the having the deltas in there. So with these, having a range of deltas, and this is something that I need to test primarily for my long term trades, is going from so the strategy that I tested was strictly zero point 0.4 deltas and 45 DTE. And that's okay, but it could be better. And how, like for me, how could it be better? And that question is answered by what if we tested a range of deltas? So instead of trading zero point 0.4 only, what if I traded to from zero point 0.3 to zero point 0.5 on these longer term trades to see if those were if I could have a higher expectancy or if I could be more profitable because of that long term. So having this listed in here with the ranges is pretty helpful, I feel like. And if your strategy relies on just one specific delta, I mean it could work, but you might be limiting yourself because I know for me having the zero point 0.4 delta 45 DTE, it's really limiting myself, and it gets to the point where there's sometimes I can't place a trade. And actually Trey J, in the last teaching to trade, we were talking about it, and we had to go in and place a sample trade with Eric, and we had to walk him through it and everything. And I go in, I took volunteer to go first. I'm going in, I'm doing all the technical analysis on XLE, and I get all the way through this, and he was like, okay, so what's your trade looking like? And I was like, okay, let's move to the options chain. I start scrolling through it. We go all the way to 45 DTE. And then I get to the point where I'm sitting there and I was like, well, there's a 0.44 delta there, and there's a point, like, I think it was a 0.32 delta right underneath it. And we were kind of talking about it back and forth for a second. And I was like, yeah, I wouldn't place the trade just because it's not a point 0.4. I would dare to say that I would give myself a little lenience all the way up to 0.43, 0.42, but I was like, it's 0.44. It's not what I'm looking for, so I wouldn't place the trade. And we went through it and skipped. I think we went back like 2 years or something like that. So it was completely unknown how it was going to move, and we skipped ahead in time, and only to realize that if I were to just given myself that allowance to move up or give myself a range of deltas to trade in, I could have placed that trade and it would have been insanely profitable just because the underlying it moved up. I think it was XLE at that time was in the low 80s and it moved all the way up to 90. So it was like trading around 82, 83. There was it was an 84 call, and by the end of expiration it moved all the way up and was trading in 90s. So it just goes to show that, yeah, I could have a strategy tested out really well, and it could have all of these numbers around it. It's positive, it's profitable, it's this, it's that, and it works. But it could be so limiting that I could be missing out on other opportunities that are just as good, if not better, by extending that that number out, having a range instead. So I think that's a pretty important note for me moving forward. And then, listing out theta. I know for most people that's pretty important, because you'd rather not lose premium in an option due to theta. So, theta matters to me for this strategy. So having this listed out and just saying this is what you're looking for is pretty helpful. It just kind of takes away some of that confusion. It just makes it easier to follow. And with this, you can't. I don't think you can always say you need a 0.01 delta. So finding the lowest theta available is that's your best bet. And then saying that if you can find it, because you have to make the trade off. I mean, if you're placing a shorter term trade, you may not have a very low delta. I mean, it may be low relative to that trade, but it may not be, a 0.01. It may be 0.06 or 0.07 or 0.10. So just a good note that I found was, it needs to correlate with your delta and IV, and then it also needs to correlate with your time frame. So, just for me, I found that was helpful.
That's nice. Hey, quick question on the delta there. You made a note that you wouldn't trade anything below 0.37 delta if it's 45 days to expiry. What was that reason for? Do you have any specific reason for that, or did you just put that in there to give you some context?
So that's actually for this point right here, this expectancy. So this is what I was trading. I was trading 45 DTE, 40 deltas, and I have it on a trade log. I might be able to pull it up actually. But I did this experiment where I only used those two variables and I traded in a variance from 0.37 all the way up to 0.43. And when I did that, I was like, oh, cool, it's on here. I didn't know if it was going to swap screens or not. So, so looking at it, I have this listed out where all of these deltas are within this range. And it's a very, very tight range. So I found that the expectancy for it was, oh, it's down here, but it's all jumbled together. Let's do right here. So the expectancy I found it was 40.24. The average win was 395, the average loss was 315, but there was a 50-50 win loss percentage. So I said, okay, well, long term, it's expected to be profitable, and I'm okay with, having a 50-50 win loss percentage for now because that was just my baseline. So, taking all of those things into consideration, I said, okay, well, I can use this trade. It's a baseline, it needs to be better, but I can use it from here. And so I added this note in here, and then I added this note in here because this note right here is saying that as long as I stay at 0.37 or higher, I know that this will be a profitable trade. So that's why I'm saying, don't go lower than a 3.7 just because it's not something that I've tested yet. So I don't know truly if it is profitable. But that's exactly why this is here.
Yeah, makes sense. Cool, man. That's a good idea. I'll put that in my note too.
And then, having this expectancy here, it's for me, I feel like it's just more of a confidence builder. It kind of gives me that security to look at this, and after reading through all of this beforehand, I can say, oh, okay, well, when I trade this and this, I have the expectancy yield of this. So, therefore, the strategy for these listed two variables is profitable. So I know that I will be profitable in the long term because of that. And once again, like I just said, this is just a baseline. This is just something that I worked out to say, okay, I have one strategy that I can really do and I can lean in on, and I know it's profitable. Now, how can I make it better? So instead of having that 50-50 win percentage, how can I make it 60-40 and then 70-30, or and just tune it up from there. And then last two notes for the trade, for the strategy itself, I have placing the trade. So it's once again, it's just a quick little paragraph, few sentences of what it's like to place the trade, in real time. And it, once again, for me, I feel like it's a tool to help myself understand what I'm looking for, and not to just have the idea in my head. It's better to get it out in words and it be something that's easily readable and understood. So, after reading through all of the previous, like metrics, like the setup, and after the profit and loss, after the allocation, after the time frame, you have all of that in your head, and you're just looking through it and saying, okay, you're wanting to take on some directional risks. You have that clear defined max loss. You're looking for the underlying with these specific measurements, and then you're going into the options chain. You're looking for the low IV, and then you're looking for the delta that was specified, and you just have these little things all listed out just to say, okay, well, I know what I'm going into. I know what I'm looking for. I know how to do this trade, and it leaves out room for questions. These little things, just little notes that I have, since I'm always trying to go in and update this as often as I can. I just leaving these little notes or even these comments, I don't think, or I don't know if you guys are seeing these or not, but having these little comments here just from other people going and reviewing it, and then I mean I could even do it myself. It's just not something that I have done, but that's just another extra, I guess, measure in place to go through and read through the trade and just understand it a bit better. And then lastly, for it, avoid placing this trade if list of reasons. For me, it's you're approaching earnings or you have an overall bearish assumption. So this strategy itself, it's a bullish strategy. So you're not looking to place this kind of trade, if you have a bearish assumption, but you're also not looking to place this trade if there's earnings approaching. And I mean, that really only applies to the single stocks. It can hurt the ETFs, but once again, it's not something that I'd be willing to trade around earnings. So just another little note to add. But that right there is the entirety of just what one strategy looks like, how I have it broken down, and so far, what works out well for me. So yeah, does anybody have any questions or like notes that they feel might be beneficial? Sounds like Shrey's trying to. Cool.
Ty, how many strategies are you working on right now?
3. It'll be 3. And that's so it's this long call. It is the call leap diagonal. And then I deleted it on this version, but on the previous versions, I have the, what was it? The vertical spread.
Why'd you delete it?
Just for this strategy, I didn't want it to be on the reviews, just because it's not something that I want to be. Yeah, I don't want that to be reviewed right now, just because I know I'm not going to be using it, right now.
Totally fair.
Yeah, the big one that I need to work on now is the leap diagonals. And funny enough, I took on Thinkorswim. I just took one of the trades that they had set up, because on the app you can set like what type of trade you're wanting to make in the option chain, and I did just a leap diagonal, and I just followed the prompts that they basically had on there and on XLE, and I've been watching to see how it works just with the short call and the long call, and it's that's been fun just because it is insanely in a loss right now because XLE's been rising so much.
You mean just the short calls are showing a loss?
Yes.
Yeah, but the leap should be making money, yeah?
Yeah. It's moving at a rate right now where the short call has outpaced the long call so much.
Yeah, so that means that, and that right there is how a typical diagonal is set up. Is that right there? And that's the exact reason why I set up my diagonals the way that I do. Because, if you've seen the way that I structure mine, there's no upside risk. Because that scenario has frustrated me so much before.
Mm-hmm.
Yeah.
Yeah, so that's a good note to add in.
What expirations, like windows, have you thought about for your long calls? Just your long calls?
Just the long calls. So just as a long call strategy or long calls in the diagonals?
Either or.
Oh, okay. For the diagonals, I can say that I was looking at 45 45 DTE to start, just because it's what I have for the long calls. But I was also looking at the 90 days or max DTE, so moving into the the years for the trades. But I also need to see how that works in with my allocation.
Yeah, I think it's important with any sort of long option that you offer yourself some flexibility for timing. So the way that I think about like long calls or long puts, it's a very directional trade. So depending on how confident you are in a move, the way that I kind of summarize it is if you're placing a long call, you're expecting that move within that amount of time. And if you're not confident in that amount of time, then adding more time sometimes gives you a little bit more room to be right. And then the other thing that you and I talked a little bit about that's good to integrate, I think, into your plan is just the sliding scale between going further out in time to decrease overall theta decay and then how that compares against your delta selection. Because I think those are very useful tools. Like I'm actually working on a video right now called Optimizing Your Options Trades. And one of the things that I'm going to discuss in that is exactly what I'm telling you right now. The fact that if you're trading a long option, you can do a couple things to decrease the amount of theta decays. All of those things have corresponding impacts. You can go deep in the money, but now something's more expensive. You can go far out of the money, but now something's very cheap and you need a big move.
Mm-hmm.
So when you're sketching out your long options strategy, I think whether you sketch it in there or you're just cognizant about those trade-offs, it's super useful because if you want to take a directional bet on something, but you're really, want it to be on a cheaper side, you can go far out of the money and go further out in time, and now you can meet that threshold. So different ways that you can play with DTE and delta to hit the exact exposure that you want.
Yeah. Yeah, and I appreciate that. Another, big note that I was talking about too was on the delta selection just for the long calls was the just the delta itself. I talked about that example trade that we went through the other day and how, I went through the technical analysis, and I laid that out. I gave my overall assumption. We moved into the options chain. I found the DTE that I wanted, started looking at the strikes, and, since that strategy that I have is so limited, it was that strike, the 0.44 delta that we were looking at.
Mm-hmm.
I wouldn't take the trade just because it wasn't within that really tight range that I had, and I was talking about just how that could affect your profitability because we didn't know how the trade was going to move, and it ended up moving, pretty significantly to the upside. And if I would have just either have the range, a wider range, or if I would have been willing to accept that trade, then it would have been pretty profitable. So that's another important
Yeah.
note.
Yeah, I think in that one example too, it was interesting to me because it was almost like an extreme where it's like you only wanted like a single delta. It had to be like a specific number,
Mm-hmm.
and that I think is very very difficult to find.
Yeah, it's been even like placing because it was easier to find on demand just because I can search through time and find what I want. But it's been a little more difficult in real life in actual paper trading accounts. And I find myself not really sticking to that exact point 0.4 delta. I find the little variances around there.
Yeah, and to me, like that's just practical. It makes sense because I'm not convinced if you trade a zero point 0.4 delta versus a 0.38 delta, you're going to see any sort of like meaningful long term difference between the two.
Mm-hmm. Yeah, I agree. Yeah, and at least for this or that strategy or that delta, just having it that specific, it was just a baseline because for me, I know I needed something that I
Yeah.
could just I could have, rely on, and know works. So just from there, having that, it was kind of reinforcing. So
Yeah.
moving from there, it's just the next step, which is good though. I mean, it's in the notes to try the range of deltas and see how that affects expectancy, and then try the different DTEs and see how that affects it. So it's just
Yeah.
fun tweaking around with things.
It's the name of the game.
But yeah, if I know I'm done with talking or sharing at least my screen. If anybody else has anything, Shrey or Gnome or is it Yale been in here for a little bit, hanging out. I don't know if you guys have anything.
No, I appreciate you showing here. So I'm wanted to start working on mine this weekend, but I didn't really know how I wanted to lay it out. But I have a way better idea of what I'm going to start doing this week now.
Yeah, man. And I know a really big thing is not to worry about too much of what you think it should look like, but more of what works for you. So if it's just you throwing words on a page, for a little bit just to kind of get your thoughts on paper, then do it. And you can always tighten it up from there. It's, just a computer document that you can edit and erase as much as you want.
Yeah, for sure. I think I was just getting caught up in the analysis paralysis aspect of it, but I think I just got to start doing it.
Yeah. That's how it was for me for sure. But cool.
I have a couple videos too that offer like the way that I think about the structure to kind of like create an outline that you can fill in to like exactly as Ty said, to start getting like words on paper, because I find for most people that's like the biggest hurdle for them is they don't know what they want it to look like, or they don't know exactly what they want to put in there, so they don't start, and then it just leads to this thing that just never starts.
Yeah, my biggest thing is I wanted to make a document that like I could hand to just my troops, and then they'd be able to understand at least what, like basically a play-by-play that they could do, not necessarily so they can just do that, but it gives them a good starting point. You know what I'm saying?
Yeah, and I think that's a good like aspirational goal. It takes a while to get there. Ty can speak to that. He's been working on his for a minute now, and we're still going through different iterations. So I think it's definitely a good endpoint to target. But yeah, I think getting something started is probably the biggest hurdle for most people. And then once you get something on there, it goes almost the opposite direction, where I find myself adding too much shit and I have to pull stuff out.
Yeah, I can definitely see that. I can see that happening.
Yeah, I can agree to that too, just because once I get things outlined, I want to go in and I want to start adding, this, and it's like, oh, I can add this note, and then it's add this note, and then before I know it, I have way too much that I feel like, at least on the page, and I have to either, you know, um, just cut some stuff out or try to make it tighter. So it's, I don't know. I just wanted to just keep adding to it.
What I do that makes it a little easier is I've set up like a template in I have mine. It's not in Google Docs in Microsoft Word, but I think it's the same for Google Docs, where you can set up different headers that are subordinate to other headers. So I use that table of contents, and then I also have it so that I can close down certain sections, like collapse it. So it's just the title, and then if I want to go into something that I know is a little more detailed, I can expand it and read my thoughts, but they don't have to all stay expanded and essentially make it like a 400-page document.
Hmm.
So there's a lot of like little formatting tricks that I also think go a pretty long way to keeping it manageable. Because I think early on, like more detail is the goal. Because for most people, what they're going to find, in my opinion, is that they actually don't add anywhere near enough detail.
Yeah, that's a good point. Well, I know I need to hop out of here. I need to go start working on Mother's Day.
Hell yeah.
It's a fun time for me.
All right.
Um,
Well, I'm glad you guys got a chance to link up this morning. Thanks for letting me hop in for a little bit. I'll see you guys.
yeah, see you. Thanks for showing up, guys. And I mean, I'm gonna try to do this every week. So if you guys have anything, I'll throw the announcement in probably like Monday, Tuesday ish, and then once again, if you guys have anything that you want to bring in next week, feel free to just, come ready to talk about it. Otherwise, I will try to bring something myself and see what we can go over.
Sounds good. I'll try to get started on mine this week also. So appreciate it, man.
Yeah, man, of course. See you guys.